Good morning, everybody, and welcome to the first SFI Live of 2022. I'm Jay Evans, your host. As usual, I'm back. I had a little bit of a break in December, but I'm back now. Joined again, as always, by Mr. Tony Hall. Tony, do you want to give a little introduction to those that might not know you?
Yeah, morning, everybody. My name's Tony Hall. I'm the head of sales here at Saffron for Intermediaries.
Again, a short and sweet. And also Holly Andrews, another staple in the diet. So, Holly, say hi and introduce yourself.
Morning, everyone. I am Holly, and I introduce myself every time. Intermediary team leader at Saffron, so look after our telephone-based BDMs and our intermediary support team as well.
Sorry to the regulars, we do this all the time because we do have new people every time. So apologies to those of you who hear this every single month. And we have a very special guest on the panel today, Mr. John Reid. John, nice to see you. John's from the underwriting team. So I'm going to let you introduce yourself. And can you tell us a little bit about your role? Because you are a new face for us. So yeah, just a little bit about what you do at Saffron.
Absolutely. Good morning, everybody. Like I said, my name's John. I'm the underwriting team manager here at Saffron. Been with the society around 5 months, so still relatively new. But the day-to-day job role it intakes is day-to-day management of the team, ensuring their workloads remain within our SLAs, so 1 working day for a dip to keep within turnaround times and 3 working days for our application processing. Also, requirement is to ensure the continued quality of work that we're going through, making sure underwriters are fully rationalising documentation and justification for the decisions that they're making.
Amazing. Thanks, John. We will be coming back to John. John will be chipping in at the first part of the webinar too. We'll come back to John with your questions. So please use the chat box on the right. If you haven't joined us before, in the chat box, you put anything in there, put your questions in there. We will get round to them, or we put them directly to the panel. So that can be for Tony, Holly, or John. I don't answer questions because I don't know anything. I'm just a host. So do pop your questions in there. We'll get round to them. If we can't answer any, we've got your contact details, and one of the team will come back to you with an answer at a later date. So yeah, pop that in the chat room. First, before we start anything else, here's a brand new year, Tony. It's our 3rd year, which is a bit weird.
Yeah.
Because we're in a 3rd calendar year. We're not 3 years in yet. So we're doing this a while. But I want to just kind of have a little bit of a look back on 2021. We did quite a lot of these. We announced a lot of new products with a lot of new changes. So maybe you could just, for the sake of it, I've just looked, there's quite a few new faces on the guests today. So maybe just a little bit of a recap on what 2021 in Saffron looked like.
Yeah, definitely. I've kind of started a list, and I think I'll take the whole hour, to be honest. So I will paraphrase it as much as possible. I think we started, we launched limited company buy-to-let back in early 2021, and that took off like a rocket. To the point where we had to dial it back a little bit. So we really hit the market there with limited company buy-to-let. We launched our self-build large loan product in, I think it was May or June of 2021. And that is really starting to gather pace. I'm still staggered by the number of people who are building their own home and need over £2 million to do it. These are some big things they're building. So that's been a brilliant one for us. We stretched our LTV on self-employed and contractors to 90% to recognise that, that area of the market, sometimes it gets a little bit ignored when it comes to deposits and how much is needed. First-time buyer, 95%. We kind of bought that in late 20, but developed the proposition in 2021. We brought our standard owner-occupied residential range to 95% during 2021 as well. So those buying a second home you want to make that move and don't necessarily have that deposit can now do that. We undertook our biggest criteria review probably in 170 years and relaunched a policy that we kind of call our pandemic friendly policy, really. And we focused on some of the key industry issues that were affecting people. So the self-employed was a key one. We will now ignore the pandemic trading year for the right circumstances. We increased our acreage on properties to 20 acres, and we are far more acceptable for things like annexes now. So these were all the trends of last year in terms of where people were looking and how they were looking to buy houses. I think the other exciting thing is that I grew the team to 9 last year. So we've now got 9 in the intermediary team, and there's more to follow this year as well. So, and what that provides us is the opportunity to give even more support to all our brokers and advisors and all our firms. And, I think that's been testified because, we've just done our half-year survey and we're now being awarded 4 stars, which is brilliant for us. We won't rest until we're 5, but we're making significant progress last year, and that'll continue into this year.
Amazing. Great recap. Thanks, Tony. Holly, your question was about criteria. Guess what? Tony's answered it. But,
always full of surprises.
It's the other way around. You're usually answering for Tony. So, let's give him credit for this. But just anything to add to that? I mean, we talked about the support for the self-employed and various other things. How did 2021 work out for your clients, and what difference did all those changes make?
I think for us, it's just being able to help in those certain situations. Limited company buy-to-let, we had 3 months of fantastic number of applications and completions on them, in a lending area that we'd come back to, which we'd restricted post-pandemic. So, helping with our buy-to-lets, it's first-time buyer, first-time landlord, and they can be that on a limited company buy-to-let as well. So, it's giving them the opportunity, and a lot of people have been advised by their accountant to move to a limited company with their buy-to-let, so transferring into that sort of portfolio. So that was beneficial. And I think the self-build is always been a sort of a key driver for us, is looking at those modern methods of construction, looking at those complex cases, and just being able to help somebody buy their dream or build their dream home, and it's not just your standard 2 up, 2 downs. It's ones that look like tree houses. It's ones that look like, not as quirky as shipping containers, but it's definitely looking at the quirkier properties as well, where, the high street haven't quite got the option for them to do a self-build that way. So I think it's been really good to see our product range expand, the 90% for self-employed and contractor, 1 year's accounts at 90%. We restricted it pre-pandemic, and now we've got it back. And and just helping those ones that have been affected by the pandemic, looking at these self-employed criteria changes where we've been able to, sometimes in the right circumstances, not count the COVID year. There's been a lot of good changes in 2021, and I know, no spoiler alerts, there'll be some in 2022 as well.
I'm sure there will be. And no spoiler alerts today. Tony, no leaking anything out because I don't want to get us in trouble. So let's start off with some positives for 2022 then. I don't want to jinx it. The signs are that we're getting back to some kind of normality by the end of this month. Cases are going down. So the pandemic's not over, but it's progressing to being over for us daily. But the effects of that are still lingering, as you've been talking about the criteria changes and trying to help people who have, the self-employed who have maybe taken a grant, looking at those various different things. What about 2022, Tone? Without any spoilers, but what can the brokers expect from Saffron this year? Are we going to have another year of so much change and so many adaptations? Is that what we can expect from Saffron?
Yeah, basically, there is. We didn't do half the stuff we wanted to do last year, purely because of resource and the fact that we're still halfway through a major system upgrade, which will make everybody's lives better when that launches. So we're hampered. We have a real desire to operate in all those niche areas that the market needs, and we know them. We're not in all of them yet, and we'd like to be. So that's what to expect in 2022. We continually review our policy, so I expect us to be making changes to our policy to again help support the markets that we want to be in. We're in some of them, but our policy isn't necessarily as helpful as we would like it, so we're looking at that. And it's just all about how to make us easy to do business with. So it isn't just about our policy and product, it's about how we do things. And there's a real commitment and focus from the whole society to have service that stands out. So, that's an ongoing trend, and we made big steps in it last year, but we've still got a long way to go to meet our own standards. We're at a high standard, and when we benchmark ourselves, we're doing really well, but it's not where we would like to be. So there's more to come. As I said, we're growing the capacity of the team and the capability, not only in my team, but in the underwriting team, in the processing team, making sure we've got the right quality and level of staff to service the business that we get. And yeah, as I said, we've got the new system upgrade, which will bring some new features and functionality for people, which will just elevate us that step further. So big year ahead.
Wonderful. Thanks, Tony. Just touching on that, we'll go back to that in a second, actually. But John, just to throw something at you as a relative newbie, you said in your introduction you've only been with the society for 5 months. What's excited you the most in that 5 months? What is it that's in Saffron that you think stands out in your experience? I mean, you've been in the industry for a long time.
Yeah, I mean, I worked 15 years as an underwriter and quality manager elsewhere before joining Saffron. And the biggest thing that has impressed me about Saffron is the actual case management, case ownership that we offer. So you will have one underwriter that picks up that application and sees it all the way through to offer. I think that's a massive benefit in the fact that you've just got one person looking at it rather than multiple people doing it. And it also gives an actual human being the chance to look at it rather than just a system that says yes or no. You can have good interaction on the email with the underwriters. We are hopefully trying to get access to phone lines as well. Again, massive positive, which is really good. But that's the biggest thing for me. That the real positive is the case management, the case ownership that underwriters have with all their applications that they look at.
Shall I say it, Tony? Common sense lending, and
Exactly.
and it is that, isn't it?
Absolutely.
John, for your benefit, I know you've not joined us, but we do say that a hell of a lot. We always feel like we need to reinvent that phrase, but it's true. It's what you do. So on that, Tony, you've mentioned on a previous webinar that there might be an opportunity for, or your team, as in the BDM team, are actually going through a bit of a process to really understand the underwriting process. Is that correct?
Yeah, we like to put my team through the same training that the underwriters get. We are that first, the first point of contact for our brokers, either because we've got the relationship already and they're speaking to our BDMs and telephone team, or our quality intermediary support team, or they're brand new and they've seen something on a sourcing system and they just want some further assurance that we're going to say yes. So it's important for us that my staff are comfortable and know when to say yes and know when to say no. I think the other beauty that we have, and this is, I think, pretty much unique to us, is that every morning my team and John's team meet and we discuss any tricky cases. So if we've got any inquiries from the day before, we can raise them and have a face-to-face conversation about it. That is, in all my years of being in this world, I've never had that luxury before. So that is something we're really proud of, and that won't stop.
Great stuff. Well, all very positive. Samantha has submitted a question, Tony, and literally we've just had this conversation, saying, what are your thoughts re-lending in later life, free or interest only at competitive rates? Now, I'll answer. I'm going to come to you, Tony, but I'll answer it and just say we have a webinar on the 9th of February. So it's actually very, very soon that we will be talking about later life lending. So Samantha, if you want to join us for that, for more in the depth chat, there'll be an email going out in the next week or so. So keep an eye out for that. But Tony, just to answer and repeat Sam's question, what are your thoughts re-lending in later life, free or interest only at competitive rates?
I'll do my best, and I'll transfer to Holly to give the truthful facts. But look, it's an area. It's a big area for us. We operate in this market, and I don't think we shout enough about what we do in this market yet. And we also want to make further improvements. But we're also, we're already in the Rio, so we offer the Rio product. We also have a downsizing product for people as well, which interest only downsizing option. We also don't have any maximum age on our lending. So it's based on ONS mortality tables that we use. We can take earned income up to age 75 and, further with exception. So we're quite well covered in the market. And as I said, we just want to do a few more bits to make us even more attractive. But Holly, have I missed anything?
No, that was a fantastic summary.
Wow.
8-star.
You're getting a promotion soon, Tony. Great stuff. Sam, I hope that answered your question on that one. But again, anybody interested in later life lending, come and see us. Same procedure as this one, 9th of February. So with this is a new layout and timing for the webinars. We're coming much earlier in the month, and we will be able to talk about recent product changes and recent product launches on each one. We won't be able to say, oh, by the way, coming up, we can't tell you anything about it. So prepare for a new scheduled event, and that'll be sent up by the team. That takes me to my point, Tony, actually, during your last sort of monologue with regards to keeping people informed of all the changes. I think it's a really good point. We'll repeat this at the end of the webinar, but just to sign up and make sure you're getting those regular communications, making sure that you are registered on the Saffron for Intermediaries website, right?
Exactly. The best way to keep up to date with what we do is to register on the website so that you've got access to the portal. That gives you then straight away, when you've got a case, you can put it straight through. But also it means that we can keep you up to date with product changes, criteria changes, and anything else that we're talking about. So that's the best way to do. And when you do register, you will get a lovely phone call from one of the team to give you the Saffron for Intermediaries welcome, and they'll tell you all about what we do and how we can help. Our brokers love it, to be fair, because you get a really clear view of how we can help.
And just to reassure the viewers, we don't spam you. We don't spam you. They are really vital emails. They're proper updates. So the website is saffronforintermediaries.co.uk, but we'll repeat that at the end, and we'll give you some contact details just in case you have any problems signing up or you want to do a little bit more information. So we'll do that at the end. For now, Holly, I'm going to leave your last question to the next webinar. So we're going to welcome John into the fold and into the conversation. Now, John has joined us very kindly and taken some time out of his busy schedule to answer your questions. So please do pop your questions, just like Sam's done, into the chat box, and I will fire them at John, and he will tell me if he can't answer them. If not, the other two will pick them up. Same, if you've got any questions for Holly or Tony on any of the processes, any of the products, anything, pop it in the chat box now, and we'll come to it. Luckily, we have had some submitted to us, so we've got some to work from while you put those across. I'm just about to ask this question, realize you kind of already said it, but how does the relationship work between the BDM team and the underwriting team? How fluid is it? I mean, Tony, you just literally just mentioned that you have a morning meeting. It's quite a collaborative process, isn't it, John?
Absolutely, yeah. I think the morning meetings are key to us having a good working relationship. Like we say, the sales teams can bring us any questions, queries, either pre-application, post-application, and it gives them the ability to go back to the broker and say, look, yeah, we've put it in front of an underwriter and this is what their answer is. So you get a quicker response. We do work very well together as a team. Like I said, we're always in good communication. Even after the morning meetings, there are occasions when we will get questions through, which is really good. And we'll always make the time out to come answer them for them as well.
Okay, thanks, John. We've had a question from Susan before I jump onto the other questions. And I'm covering this out because, Holly, I know you can cover this, and I know, John, you'll be able to as well. Temporary contracts. I used to look at a minimum of 2 years experience. Find that a lot of people are taking these. That's from Susan Johnston. Who wants to take it?
I'm happy to take this one. So temporary contracts and more agency workers, we're happy to consider, but yes, spot on. It is that we would need 2 years experience. And that doesn't have to be within the same role. It can be within the same agency, as long as they've got temporary work experience, and they also need to be the secondary income earner as well on the application. So it's just a bit of our criteria at the moment.
That's a good point. Thanks, Holly. Question for John from Charles. What are your feelings on direct phone underwriter access to underwriters? I think he means broker access to underwriters. What are your thoughts on broker access to underwriters? I presume that means.
I think for my point, the underwriters should be having, where needed, conversations with brokers. A quick question can be answered over the phone rather than an email. Like we said earlier, this is something we are currently working on. And what me and Tony and Holly will work on is, once we've got access to the phones, is look, how's best to use these to make sure, obviously, from a service point, we're not impacting completely. So I think definitely we should be able to have those conversations with brokers so much quicker. And you can get a lot more information out of on a phone call than you can on an email. Like I said, something we are definitely working on and something that we hopefully will get in place soon.
Lovely. I'm just going to touch on something we talked about a little bit earlier, because Tony brought it up in one of his monologues.
It sounds like a bad thing.
It's a good thing. It's a good thing. We need the information. It was a good monologue. But just this, the processing times within 3 days and that kind of thing. I mean, we were way off that during the busiest period of the pandemic. Obviously, I think everybody was. To bounce back to where we are, Tony, is pretty impressive. How have you as a team managed to do that? Is it just a change of internal procedures, or has it been, because obviously it's a massive focus for Saffron?
Yeah, I mean, it is collaborative working, it is working together. And the key thing is we listen to feedback, if we don't listen to, and that's why we do the 6 monthly broker survey and we do the real time. So every time an offer is issued, we will survey a broker to say, how was it for you? So from that, we get that instant hit of that was great, that was rubbish. And we have changed a lot of stuff last year as a result. We brought forward when we do evaluations, we reduced the amount of documentation in certain areas. And that's, it's through blood, sweat and tears, really, of the underwriting, processing and sales teams working together to make it better. And we want to go a lot further. It's great that we're at 1 day for dip and 3 days for stuff, but I want that better than that. And I know John does. So we're working hard to do that. I know today John's got a meeting to look at the amount of documentation that we ask for and can we cut that down? Do we need it all? So we really are focusing on making life easy as possible for intermediaries to deal with us.
You've led me beautifully into my next question, Tony. Thank you. John, there's quite a lot of, as we just mentioned, there's quite a lot of paperwork that comes in, quite a lot of information we need. Mm-hmm. We've spent an entire year last year literally changing and moving and making that smoother and looking at what needs to be done. But there's still bits of missing information, isn't there, that can slow down the process. What are the most common things you have to constantly chase the team for or the brokers for?
Well, I think, obviously, there's a lot of information that we need on the application. And like Tony says, what we do need is a key information. So what we are finding on some occasions is it's mainly down to affordability. So student loans on payslips, SA302s, childcare, and even on occasion sometimes children not being included in our affordability assessment, which can have a detrimental impact on the affordability, as everybody is aware. In terms of self-build, there's just probably a couple of points which are really key. We do really try and give as robust a dip as we possibly can on a self-build. But some of the bits of information we do look for, which sometimes not always on, is where the applicants are going to live during the build and at what costs. Are they going to rent or they're going to live with family rent-free? And the repayment strategy as well at the end of term. Obviously, we do offer the 2-year initial interest-only period on self-builds. But if the intention is to remain on true interest only for the rest of the term, we still need an acceptable repayment strategy. Or if it is to amend to capital and interest at the end of the initial 2 years, then we need to be told that as well. But those are just some of the key bits that we do look for, yeah.
Okay. And notes. Tony, yeah. We've said this 100 times, haven't we? Make a note. Tell us why. Tell us what this is. Let us know what everything is.
Yeah, absolutely. And I think from an underwriter's point as well, the one thing I'm really trying to work with the team is just asking for the things you need, not the things that would be nice to have, but what you need to actually make that decision. Rather than coming back with information that would be just a little nice piece of information to have. Will it actually impact your decision? Probably not. So let's probably not look at asking for that.
Great stuff. Thank you. Sandra's sent in a long question, so bear with me. I'm going to read out as it is. So, guys, if you could digest just to make sure, because obviously when I'm reading it out, I'm not really understanding it. But is there some flexibility on criteria, underwriters' comments, or is it always fixed? Example in mind is where block insurance may have larger than usual excess due to a previous claim. Would this be straight out of criteria, or may there be some room for flexibility? Let you digest that one. While we're doing that, we'll just digest that. Sandra, we'll come back to you there. I'll just let John read that. But let's just pick up on the point about paperwork again. Sign up is the best way to go about this and get the information you need. There is lots of information on the Saffron Community Reviews website. It's really being updated. There'll be a lot more information going on. But again, when those updates are made, we'll keep you informed. John, how are you getting on with that one?
Yeah, underwriters do have discretion, but again, I am still getting used to the Saffron criteria. So I think let me take that one away. But we do have discretion, but only to certain elements. Whether that's one of them, I'm not sure, and I don't want to give the wrong information, so I will take that one.
Sandra, we have all of your details. I'll pass them to John, and the team will come back to you with feedback on that one. So thanks for the question, Sandra. Appreciate that. Mark's put a question in while we've been waiting. So self-build, 3 separate plots, separate owners, using one builder and a professional team. Would you lend on all 3? Holly, I'm going to come to you to give John a breather.
Wow, I'm going to hope I answer this right, because I would be a bit restrictive on this one. So previously, where it's been a multi-plot development, we have only wanted at least 50% of the plots close to completion or nearly completed. So I would say that we can help with projects, but in that particular scenario, probably one and want the other 2 near on completion. However, John may disagree. So yeah.
I think Holly's throwing it back to you there, mate.
No, I would agree with Holly on that. Like we say, we always like to see them part way through as well. So yeah, I would agree with one on that. Yes.
Okay. A pre-submitted question. I think we've covered this, but maybe we can go into a bit more detail. Again, pick up whoever would like to answer. My client's been affected by COVID, but is trading again for 12 months. Can you take the latest year's figures? Now, I presume that means on a self-employed, I presume. John, do you want to take it?
Absolutely. I think this is where Saffron's really stood out during the pandemic. Because obviously we have manual underwriting, it gives underwriters the chance to understand the customer circumstances. And in that, if we can establish, look, the reason for a potential fall in profit or turnover is due to COVID, then we have the ability to ignore the COVID year. Absolutely, yes. And that, again, is a fantastic thing, knowing that obviously the pandemic has hit everybody. But again, allowing us to use that common sense approach of understanding what the business does. Can we see it's bounced back? Absolutely. Then yes, we will look to ignore the COVID year.
While we're here, it's not part of the question. We're going to chuck it out there. I briefly mentioned the SEISS grants that people have taken. A lot of people, and the more self-employed people I speak to, their accountants told them to take the money, stick it in the bank just in case. Now, that has had a negative knock-on effect when they're going to apply for mortgages. So with the self-employed products, again, I presume that falls under the same thing, but we can ignore that, John, to a degree, if they can prove that they haven't spent it, I presume.
Yeah, so again, this is where we do like to take a view. So obviously, I agree. I think a lot of accountants were telling people, look, take the grants. It's free money, off you go. What we will have to look at is obviously the profitability of the business when that's taken into consideration, because obviously that will go as part of their in their profit and loss. But we will look to consider those in certain examples, yes.
Does that equate for slightly larger businesses that have the bounce back loans too?
Yeah, so the bounce back loans are slightly different on the fact that they are to be repaid. So that is something that we do need to consider as part of our assessment, yes.
It's classed as a debt. There's anything else in it as repayment. Lovely job, thank you. We're going to stick with COVID just for a minute. Tony, I'm going to get you to talk because it's a general comment this time for those that are on furlough. How's furlough impacting? Again, you've talked about these changes in looking at the year. How's furlough impacting applications?
Well, again, we've never changed our stance at any point throughout. So it's a case by case basis. So we'll assess an applicant's ability to afford the loan based on their employment circumstances at that point. So we're not selecting against, we're not selecting for. It's that's the beauty of human underwriters. Again, that we can take that view.
John, just keeping with it again with this, one thing Furlough brought about was a lot less money, not a lot less, but a considerably less money than a general salary. People may have fallen behind on a few payments that have affected their credit rating, maybe not dramatically, but maybe enough to take them under. Have you got any tips on how to improve that and how to get around it, or is it just something that we need to ride out on our credit files?
So I think, yeah, again, the pandemic has hit everybody. I think from an underwriting point, again, if we do see elements of adverse credit, it's about understanding the reason for the adverse credit, which is what we need to know. That allows us to make that informed decision of understanding, yes, 6 months ago, you were hit as part of the pandemic, your income significantly dropped. And yeah, as a human, you did miss some payments. Absolutely. It's the key for us is actually knowing that information, and that's why you have got those elements of adverse. And this comes back to those important pieces of information that will help us make the decision, and hopefully the good decision in being able to proceed to lend as well.
Notes. We keep saying
Absolutely.
it. Much information as you can give. We never get bored of information. Great stuff. Expat question. Do you offer expat buy-to-lets for expats living in Dubai who are first-time buyer, first-time landlords? Excuse me. John, I'm going to throw it to you again. I'm going to give you guys a break.
Absolutely, yeah. No, definitely that is part of criteria that we do allow. In terms of them being a first-time buyer, first-time landlord, absolutely fine. We will consider those, each case on its own accord. The factors in Dubai, absolutely fine. They just need to meet the minimum income and have the minimum ICI requirements as well.
Holly, I'm going to throw over to you now. You know what I'm going to ask. There are some places we can't offer expat buy-to-lets to. Explain for me.
So the two main ones to point out is any country within the EEA region. So we haven't been lending to anybody within that region since January 2021, post-Brexit. So we are researching whether we can go back into those markets, but it's sort of a longer process on that one. So that does rule out anybody in the EEA region. Now, the benefit is we can consider the rest of the world. So even those sort of higher risk countries as well. What we do like to consider is that, say, for example, it is a high risk country like Zimbabwe, for example, that they are earning in a different currency to the local currency. So say, for example, they're over there earning in US dollars. It just means that their income then isn't depicted by the local currency fluctuations that there might be. So it's just a bit of a side note on that one. But yeah, we can consider a variety of different countries. Our most popular applications come from America, Australia, and Dubai.
A lot of people in Dubai at the moment, isn't there? So we go back to Dubai. Expat in Dubai buying residential in UK for their family. Would you lend their earnings in Dubai currency? So I think you pretty much covered this, Holly, but let's just ask the question.
Unfortunately not. We can only help expats that are looking to do buy-to-lets. We cannot help with expat residential mortgages.
There you go, Mark. I hope that answers your question. Just going back to, something you said, John, and it is a big point. All the buy-to-let range at Saffron, they can all be first-time buyers, first-time landlords. Is that correct?
Yep.
Does that include limited company?
Yes, that does indeed. Yes, I had to double check them.
I'm just trying to pick you up. First time. I'm just trying to make you feel comfortable.
No, absolutely, yeah. First-time landlords, first-time buyers, yeah.
And I think that's the big point to make with buy-to-let at Saffron is, first-time buyers, first-time landlords. So try and remember that. Moving on, we've just had COP26. Do you remember that? I mean, it feels like it was about 16 years ago now, but it was only a few months ago. We had COP26 and everybody's talking about the environment and what we can do and the impact we can have. So our next question is, how does your retrofit product work? Now, I'm not going to throw John under the bus on this one. Tony, I'm going to come to you first on the importance of the retrofit mortgage and what it means for the green space.
Yeah, it's good because we've had this product out there for probably 2 years now, and it's not done a lot because the consciousness of the market has not really been on the green space. But that's just not as a result of the COP26 conference, but as a result, I think, of other stuff. It's really come into consciousness, the green agenda. And we know a lot of lenders are now focusing certainly in 2022 on their green credentials and what they can do. So we've had this product out there, and why it's so good is that a lot of products are out there which reward you if you buy an energy efficient home now. So if you're a C or below rating, you can get a lower rate, etc., on your mortgage. But that doesn't help the majority of the housing stock in the UK, which is largely older and therefore not necessarily as energy efficient. So our retrofit mortgage supports people who want to improve their energy efficiency and their EPC rating. So with our product, if you can improve your rating and demonstrate that to us within 6 months of completing, we will give you a 0.1% reduction in your interest rate.
Which
currently
that product in the green space, isn't it? Sorry, that is considerably different compared to most products.
Yeah, I mean, there's others moving into kind of that space, but it is different to most, which is, well done, you've got an energy efficient home, here's a reduction. Whereas ours is, you know, let's help you get an energy efficient home. And it isn't, you know, so we've had that out there for 2 years. You know, the market's now really, you know, there's a lot of reports recently around the impact and people looking for green mortgages and the impact on them. I think it's almost up to 2/3 or over 2/3 of borrowers surveyed recently would want to do that kind of loan. So it's a big area. So we have got it under review. We're looking at how do we improve our retrofit product even further, and potentially provide bigger discounts if you make a bigger EPC saving. But we're looking at the whole agenda and saying, what can we do to support? How can we help?
For brokers' clients, I think it's important to say, excuse me, the jump from say an F to an E in EPC rating is actually a lot easier than you might think. It's not, oh, look, I've got to completely rebuild the externals, or I've got to change my, you know, and there are buildings out there, you know, listed, you can't change the windows, so you can't put double glazing in, so there's alternatives. But it can be as simple, Holly, can't it? It's just putting extra insulation in a loft.
Yeah, it's just looking at those small improvements that you can make to bring up the EPC rating. It's not asking you to, you know, install heat source pumps and can make your house go a completely passive house method, you know, have the special doors or the special, I think we discussed it in the last webinar, the special cat flap for, you know, in a passive house that you have to have now. But it's just making those small improvements and getting it for us to a minimum of an E within 6 months. Is the key factor in order to be able to get that discount on the mortgage. But yeah,
I think it's really important to note as well that first-time buyers that are coming through now are a generation that are much more environmentally aware and socially aware. ESG is such a big thing. I know in the background, Saffron's working very, very hard on a new ESG strategy, because environment, social and governance of businesses is really, really important to people. And we are now starting to take personal responsibility. I know I do in my house. I've got a smart meter. I watch where I'm getting my energy supplies from. So from a broker's client's perspective, I think it doesn't have to look as daunting as you might think. Oh my God, it's going to take me ages to get that. I'm never going to do that in 6 months. It really isn't. So anybody any questions on that? I know Holly's team will be happy to chat to you about the retrofits. While we've been talking, Darren's come in. Good cough, excuse me. I'm trying to hide it. What about expat in Oz? This is from Darren. Holly, I'm coming to you. Looking to remortgage a buy-to-let in the UK, and there's another note to say he is self-employed.
Yeah, that's absolutely fine. As long as the applicant's got 3 years track history of their self-employment, we're happy to consider.
Sorry, I just had to cough that out.
That's right.
And then, okay, over to Samantha now. Do you require company ACCS, I don't know what that's looking for, accounts maybe, for newly established companies set up for limited company buy-to-let? Holly, can I pop that over to you?
Yeah, again? Of course. So we don't need the accounts for newly set up SPVs. We just need the certificate of incorporation for evidence. If the limited company has been trading for more than 18 months, you will need to provide the first year's accounts.
Yep. There we go, Samantha. I hope that answers that question. Okay, we've started on contractors before. John, I'm going to throw this at you, but feel free to throw it at somebody else if you need to. How do you treat SIS workers within 6 months, with only 6 months of SIS experience?
Okay, so what we will look at is the overall experience of the customer. So if they've got a similar track record for 2 years within the same industry, then we can look to use the 6 months pay slips that we have, use an average. or we would look to use the contract if there is one in place. But yeah, the key is understanding what the history is. If it's within a similar field, absolutely.
Brilliant. Thank you. Thanks, guys. We are 20 minutes from the end, so we do need your questions in relatively quickly to make sure we get through them all before the end of the webinar. So keep them coming in the chat box on the right. So from Natasha, residential first-time buyer purchase, would you accept a gifted deposit from applicant's girlfriend who lives in the USA? Who's going to take it? Go on, Tony.
No, we'll let John take that. He's building up to it.
Ready.
Yeah,
Building up to it.
We do accept deposits from outside of the UK, but obviously we will need to do due diligence checks, and obviously the funds make each other in a UK bank account. The fact that it's from his girlfriend is technically outside of criteria. However, would be one where an underwriter might potentially take a view depending on the circumstances.
Great stuff. Just while we're on gifted deposits, do you want to just say who we do accept gifted deposits from? Tony, Holly, whichever one.
Holly would love to answer that.
Holly, go on, Holly.
So it's usually for what we would consider as close family members. So it will be your parents, and that can include adoptive parents and foster parents as well, grandparents, step parents as well. Missed that one. Aunts and uncles, and brothers and sisters.
Brothers and sisters.
And what products do we accept them on, Tony?
All of them.
I got something out of him at least. Okay, brilliant. I hope that answers your question, Natasha. Over to Jamal. How would you treat a person wanting to let their residential flat and move into a limited company and purchasing a residential, especially with the stamp duty? John, have you had time to digest that one?
So I think in terms of a criteria point, obviously the applicant could remortgage into a limited company. Absolutely fine. What we would look at is the overall indebtedness, but it depends on if we're doing the residential. We wouldn't have an issue with doing the buy-to-let remortgage under a limited company at all. And if the applicant's purchasing a residential, that's within criteria as well. In terms of the stamp duty, not something I've come across before, not something that we would have considered, to be honest. Is any more we can elaborate on the stamp duty element, maybe?
Jamal, maybe you could just update us and pop another comment in, just what you mean with the regards to the stamp duty question. We'll get back to that. We'll come back to it and answer you on that one. But I hope that should answer most of that question. But if you could just elaborate on the stamp duty element of that question, that'd be great, Jamal, and we'll get that answered for you.
Just with limited company buy-to-lets as well, the only bit of criteria difference in that is that we cannot consider regulated or consumer buy-to-lets within the limited company buy-to-let space. So as long as he's not considered as a consumer buy-to-let, then we'd be able to consider a bit further.
Just on limited company buy-to-let, do you think the stamp duty holiday, since we mentioned stamp duty, do you think that gave it a boost, or do you think it's more of a long-term positive in the industry? I mean, you've moved into the space. Obviously, you see it as a more long-term opportunity, surely, Tony?
Yeah, it's where, for tax efficiency reasons, most accountants would be recommending those with a portfolio move that into a limited company basis. So I see it as a longer trend for the portfolio landlord, definitely.
Fabulous. Okay, we're moving over to one of my favorite, we've already touched on it, one of my favorite sectors that we talk about, and that's self-build. I love a bit of self-build. And we used to say we're more homes under the hammer than grand designs, but actually we're a bit of both now. We've kind of moved into both realms with the increase. So talk about the process, Holly, I'm going to throw to you to start with, of a self-build mortgage and what it means for the broker's applicant. How does the process work?
Yeah, so similar to all our other residential applications, it all goes through on our normal system. But the key thing with self-build is that the clients are looking to live in it once the project is completed. If they're looking to resell the property on, then you will be looking for development finance. Now, Saffron do offer development finance. I'll give them a little promo as well. And all that information for them can be found on the website. So we've got two options. But with the self-build, it's looking at, what they're looking to do, how much they're looking to borrow, what the plot is currently valued at this moment in time, and what the end value will be. But what we've designed and what you would have to submit anyway as part of the application process is a supplementary information sheet. And that's a really great data capture form because you can break down the project bit by bit and really get a better understanding of what the clients are looking for and what the end result is going to be. With our self builds, you don't have to, it doesn't have to just be a completely new build from the ground upwards. It can be a knockdown rebuild. It can be a barn conversion. It can be a basement fit out. There's a variety of different things, and it can even be just large renovations as well. So, and we can help with towards the purchase of the land as well as the build costs. So we can help with from start to finish, and we'll also take on projects midway through. We just may need a bit more information and potentially a quantity surveyor report on top.
Susan, just at the end there, Holly answered your questions. I hope that helps.
I spotted that one on the side.
That's great. And I think you did just mention development finance. I may be wrong, but I believe we've got Peter on our April webinar to talk about some changes in development finance. So if you do have clients that are looking to build to sell on small plots, so SME developers or limited company developers, they are there to help you. I can't say what we're moving into. I really wish I could, because that would encourage you to get signed up for the webinar, but it is coming up in April, and there is some news coming out in February. So if, again, as we said earlier, sign up so you're getting the emails and you can find out what's going on with those. We're going back to Jamal now. John, and as he moves his residential into a limited company, will he have to pay the stamp duty? So could he raise the stamp duty?
Yeah, so from a criteria point, subject to it not breaching the limits, then there's nothing that I'm aware of that would stop a customer raising money to pay stamp duty. Absolutely fine with that. Like Holly said, we wouldn't allow it for the consumer buy-to-let, but absolutely from what he's saying on there, Jamal, absolutely fine. In terms of the residential, yes, we can consider. Again, we'll probably just look to do a bit more checks on the overall level of debt that the customer will have, taking a residential and a buy-to-let at the same time. But absolutely, we can consider it, yes.
Jamal, I hope that answers your question. Feel free, if you've got any more questions on that, Jamal, and we don't get to you, feel free to drop an email or a call into Holly's team if you've got a contact. If not, we can ask Holly to get the team to get in touch with you. And he's just added, and by the resi video, I don't know if you answered that. I don't know if you saw that.
Yeah, I'd say that, yes. Yeah. So again, we can look at doing that, absolutely, yeah. That is something we will consider. Like I said, we'll just do the checks on making sure total levels absolutely fine. Yeah.
Amazing. Thank you very much. We're getting towards the end of the webinar. We've only got 10 minutes left, so feel free to pop a couple more questions in. We will get round to them. And we're going, and Jamal's going to get in touch. Thank you, Jamal. Appreciate that. So we just need to really touch on some of the process, some things we've discussed already. So let's talk about, first of all, Holly, where can they sign up? If these new people that have joined us today, where can they sign up on the Saffron website?
Yep, so if you go to Saffron for intermediaries.co.uk, look for the top right-hand corner and it will say register. And from there, you'll just need to put some basic details in and we'll go through the registration process within 24 hours of receiving the application. And then our login details, once you're there, you'll be able to go on and access, produce illustrations, submit a decision in principle, and go from there. But all the criteria, products, documents that you need to download, and the calculators can all be found on the website. As well as in the bottom left-hand corner, you will see a lovely click to chat button. And you can also contact us on live chat as well. So we have live chat still working during our working hours of 9 to 5.
That's really popular as well, isn't it, from what I gather? So yeah,
really nice. Great way to get us quite nice and quickly.
I love them on other websites, not going to lie. I'm always, I'll get the chat box. Don't like to talk to people on the phone anymore. So we'll come back to where to get information from and other bits in a second, because we've had a question in. How would you consider a person wanting to consider a limited company property into residential? So it's the backwards version. I think we're talking about a backwards version.
Bring it out of a limited company.
Bring it out of a limited company and move to resi.
Not one I've come across, to be honest, especially since I've been here.
I would say, thinking of previous experience, yes, we can consider. Further, it would be treated as a purchase. into their resi. But yes, it is something we would potentially consider further.
Brilliant. Thank you. Guys, this is a CPD-friendly webinar. So in about 6 minutes' time, a file will appear underneath the chat box you're looking at on the right-hand side. That will be your CPD certificate. Download it, keep it for your records. That'll be coming through to you very, very shortly. Cedric's got a question. I have a client aged 70 that recently bought a property for 700K in cash. He's extended the property and fully reforming will cost approximately 600K. End value will be at least 1.7 million. Will you be able to lend him 600,000 to do the works?
So he's already bought the property. He's just doing a refurbishment.
Yeah.
Subject to affordability checks and LTV limits. Yeah, that looks like it would fit in there. So yeah, absolutely.
So Cedric, there's your answer. Yeah. So again, if you want to get in touch with the team, have a chat about it or anything, then do get in touch. If you'd like us to get in touch with you, drop us a message and we'll get someone to get in touch and contact you and talk it through further. Back to where everything is. So going back to where we were. So Tony, just talking about regular communication, what we do. Obviously, you're on SFI Live. They know the webinar exists. We've got loads of other channels that we do communicate through. So do you want to explain how we regularly communicate, where brokers can find us for these newbies?
Well, we have SFI Not So Live, which is our podcast. So once a month, we, a few of us, and we always get special guests from the industry.
Great guests, I have to say.
And
That's
we-
not even
yeah,
because
we
I'm on it, but there's some
select
brilliant guests we have
our
with us.
guests, and we just kind of pick 4 or 5 topics, and we just chat about them, and then you can listen to that on an on-demand podcast on the podcast supplier of your choice. I think Jay always says. So that's one way. Obviously, we do. You know, we will never knowingly send anybody a dull email or an irrelevant email. So whenever there's product changes, we'll let you know. If there's criteria changes, we'll let you know. If we've just got something to say about the market and we think it's worthy, we'll share it with you. We share a lot with our partners. So a lot of you, if you're with clubs or an appointed representative, we do share that content with our partners and they share it out as well. We do a lot of news articles that Jay supports us with. So there's a lot of interesting thought leadership articles that talk about industry topics. So there's always lots of ways to get hold of us. And if any of you ever want one of my team to come and talk to you about what we do, either in one-on-one or as a team, we'd love to do that as well. In fact, we do that all the time. So we're really happy to engage in whatever way that you would like.
It's a lot more accessible now, isn't it? Sorry to interrupt. It's a lot more accessible now with Phil being in the north and Simon being in the south. You've got people out on the road.
Exactly, and we're growing that resource as well. So, and we've also, as Holly said, we've got the telephone team as well. So, we've got at the moment 5 BDMs available to talk to you, and then we've got the phone team as well, and that's going to grow in the not too distant future. So which is great news. The other thing I would say about finding stuff about us is we are fully up to date on all the criteria sourcing systems. So if you want to find something else, you come across Saffron on whatever sourcing system you use, you can be assured that detail is up to date and accurate, because it's a key thing for us. But if not, ring the team, email the team, phone the team, live chat the team. Either way, we would love to talk to you. And
don't forget social media as well. We've also got our SFI Twitter page, but we also have our LinkedIn page. So feel free to follow us on LinkedIn. Also, happy to sort of chat through cases over the phone. But yeah, LinkedIn, we're on there, and we've also got a Saffron for Intermediaries page where we'll put regular updates, same as the newsletter, and share them. So you'll see those as well.
There's some cracking videos if you look back of these guys telling you little tricks. Have you seen them all? Just to add to that, we do also have a YouTube channel where this webinar and all the other 20, I think, are based. It's just had an update. It's now a Saffron for Intermediaries YouTube page. You can find the link to it on the website. You can find it on our social channels as well. So just literally Google Saffron for Intermediaries. Our YouTube channel comes up straight away. So you can watch back on topics that might be of interest and products that we've talked about. Natasha, you got in just in time. I've got a couple of minutes. So would you allow a buy-to-let remortgage on an unencumbered property? This is to raise funds to pay back a family member who bought the property in cash for them originally. I'm getting some nods.
Yeah, we would. So as long as it's been on for 6 months, then yeah, absolutely.
There you go, Natasha. Worth putting in a last minute question. You got a nice swift answer as well. Brilliant stuff. So again, as I say, we're available on demand. Give us a Google, and you can find previous episodes. SFI Not So Live, as Tony said, on your favorite podcast channel. That's Apple Podcasts, Google Podcasts, Spotify. We're on all of them. Deezer, literally, we're everywhere. So they're available. And again, just watch out for your emails. We're back really soon. So we're back on the 9th of February. I'm going to announce it for Holly's final SFI Live for a few months. So do join us for that, because we'll end up giving it 3 times as much grief as we normally do next one. So 9th of February, me, Tony, and Holly. So that's 9th of February. Registrations will be open within the next couple of days, but the guys will email, check out our social channels. If you look on your screen now, I've just said your CPD certificate with you, so you can keep that in your files. Anything to add, Tony, before we slope off?
No, just thank you for listening. And for those who haven't, watched this before or used this before, please do get in touch. We've only scratched the surface really on what we can offer you. So if you want to know more, please get in touch with the team. Holly, what's the number?
So it is 01799 582 925. If I've said that too quickly as well, because I have a habit of doing that, there's a contact us button on the website, and you can find the information on there. And if you did want your BDM's number, then just get in contact and we can point you in the right direction. But we're all happy to help.
Yeah, I'll just say on that, we are making changes to the website, which will make it really clear who your BDM is. We're just waiting for some development space to do that. So that's coming very soon. So you'll be able to just key in the first 2 digits of your postcode, and we'll tell you exactly who they are with a nice picture, and then you can get in touch that way. So, but just thank you, and we look forward to working with you.
Great stuff. Holly, anything from you before we go?
No, thank you. It's just...
All done. We're back on the 9th of February. So, John, thank you. Your first webinar with SFI Live, and we will definitely have you back later this year if you're willing. If we
thank you for having me. Enjoyed it.
Destroyed the experience for you. So, do feel free to. Would love to join you. But likewise, if you've got any questions for the underwriting team, just go through Holly's team. As they've said, there's very collaborative working in Saffron. Everything's common sense, everything's manual, so everyone's got a fair chance. So thank you very much. Pick up your CPD certificates. We'll see you on the 9th of February with the next webinar. The next podcast is out on the 1st of February. So if you Google SFI Live or SFI Not So Live, if you want to be specific, on any of your podcast channels and click subscribe, you'll be notified as soon as a new one's come out. So we've got an interesting one coming up with a special guest this week. And there is a recent one from December with Saffron's CEO, which is a really nice listen. So that's it from us. Thank you, guys. Thank you to everyone viewing. Any additional questions, pop an email over to the team, and we'll see you in February. Take care, guys. Goodbye.
Take care.